Good afternoon and welcome to NYFP. This afternoon I'm joined by Stephen Guilfoyle of Meridian Equity Partners. Hi Steve, thanks for joining me today.
I'm glad to be here.
Well, the U.S. markets continue to digest this downgrade of the U.S. by S&P, but how much more downside do you think we could see today?
Well, my gut feeling is that we don't see that much more downside today. There's a really strong technical level right around 1148 on the S&P 500. It's a 61.8% Fibonacci retracement when you start at the lows of 2010, go to the highs of 2011, and you come back down. 61.8% lands right at 1148. So we've come close to that today. I don't think we will break that today. If we do, it could be a drop.
Well, Steve, now we've covered that alongside some of the technical levels. Later on today, we'll be getting a speech out from President Barack Obama. And I do want to get your take on S&P downgrading and cutting Fannie Mae and Freddie Mac. How does that affect the markets, if at all?
Well, I'm not surprised that the United States government was downgraded by the S&P by Standard & Poor's. I'm a little surprised the other outlets didn't downgrade. If you look at the deal that came out of Washington last week, it's really rather paltry compared to what was necessary. I mean, only $916 billion of the $2.4 trillion cut is actually definable. And out of that, only $150 billion is just projected savings, not an actual cut. So you're left with $767 billion of actual meaty cuts that you can count. And of all that, only 2% comes in the first year. So it's all backloaded in order to get out of the way of these politicians.
Well, Steve, I do want to shift our focus on over to what we're seeing over in the commodities market. Crude oil futures are extending their weakness, and gold continues to soar above the 1,700 an ounce level. But do you think pullbacks in terms of for gold futures are a good buying opportunity?
I do. You probably will see some pullbacks because if I'm long gold, I'm taking some money off of the table. People are going to take some profits. So there will be pullbacks, but long term, I don't see how gold can get much weaker than, say, maybe 50 or 100 points to the downside because it is essentially the world's reserve currency now.
Okay, Steve, last but not least, before we wrap it up, we're seeing weakness across all sectors in today's trading session, but what are you looking at and what looks like a potential good buying opportunity going forward?
I'm advising to stay in the more defensive stocks such as utilities. Energy stocks have been pounded. There's probably a spot to buy them. I'm not sure where that is, but utilities, they pay dividends and they're usually good defensive stocks, so play it by the numbers. Don't color outside the lines. That's where you go.
Okay, Steve, as always, thank you so much for your time and thanks for all your insight.
You're welcome.